بسم الله الرحمن الرحيم. السلام عليكم ورحمة الله وبركاته. سبحانك لا علم لنا إلا ما علمتنا إنك أنت العليم الحكيم. رب اشرح لي صدري ويسر لي أمري واحلل عقدة من لساني يفقهوا قولي ولا حول ولا قوة إلا بالله العلي العظيم. رب يسر ولا تعسر. أما بعد. Okay, in our previous class we have looked at the example of journal entries, the theory behind how to record the journal entries. So in this session, we're going to look at a comprehensive example of a question that might be asked in your final exam. So these are a type of question that will come up in your final exam, and I'm going to show you how to answer this type of question in your final exam. So this one is a question on capital reduction. So normally in your final exam, you will be given a question on capital reduction by the question will give you the balance sheet of a company, and the most significant information that you can look at the balance sheet that was given is that if you take a look at the part on profit for this balance sheet, you will notice that there will have it will have a lot of accumulated loss or profit and loss with a debit balance. So the main reason we are doing capital reduction is to write off this loss. Okay, you need to write off this loss. And also you need to write off some intangible assets. For example, here you have patent, trademarks, and goodwill. These are example of intangible asset. This also need to be written off, part of the losses. Okay, so if you come across a capital reduction scheme, you would probably immediately recognize that there will be a debit balance in the profit and loss. If the question do not have any debit balance in the profit and loss, then the question might be something wrong with it, because the main reason we do capital reduction scheme is to write off this balance here. Okay, this is the main feature of the question. And apart from that, below here there will be an additional information relating to the profit and balance sheet that was given. Is that number one, there will be information with regard to preference shares, dividend in arrears, and also contingent liabilities. Okay, contingent liabilities. So in this question, the preference share dividend is 2 years in arrears. 2 years in arrears, which is you have to calculate. If you take a look at here, the authorized capital, here you have 2 million, 9% cumulative preferred shares, the par value is $1, and ordinary shares, the par value is 50 cents. The issued and paid up capital consists of 1,500,000, 9% preference shares. So 9% preference shares with a value of 1,500,000. So the dividend would be 9% of 1,500,000 times 9%, then you get 135,000. And it has been 2 years in arrears, that means 2 years. So total amount of 270. Out of this total amount, you have to look into the additional information given in your the second page, how much you have to pay. Okay, so for now you know that you have 2 years in arrears, that means 270, and additional information further down in the second page you will have the amount that how much you have to pay, which is 40% actually. So this is the amount that we're going to record. And then there is a contingent liability. This contingent liability is a liability that may or may not incur in the future, depending on your additional information on the second page. And here they just mentioned that there is a 31,400 due claim from one of the employees. So out of this amount, we will know in the additional information in the next page how much we have to pay. Okay, so it is very important to take note that the par value here in the authorized capital, the par value is $1 for PSC and 50 cents for OSC. Okay, and the question will give you additional information with regard to the capital reduction scheme. So these are the capital reduction scheme set out in additional information, and below there is the requirement by the question. Normally the question will ask for the journal entries and also without narrations. Okay, journal entry without narrations. And part B, normally the question will ask you to prepare the financial position or the balance sheet for the company after the implementation of the capital reduction scheme. Now, to answer this type of question, normally what you have to do is it is important to because the question asks you to prepare journal entries, you do not actually have to prepare the T account, ledger account, but it is actually helpful for you to prepare the T account, because later on you're going to calculate the balancing figure in that account, and that the balancing figure could be loss on reorganization or capital reserve. So it's helpful to open up the ledger account for capital reduction account. And you also need to prepare financial position. Therefore, you have to prepare the skeleton of the financial position, just like this one, a skeleton. So in a skeleton, what you need to do is the topic, the title, and you just put authorized capital and issued and paid up capital, long-term liabilities, okay, and put the item in the question mentioned there, and then reserve, and then non-current asset, land and building, plant and machinery, motor vehicle, current asset, inventories, account receivable, and so on. Just put in the title and the name of the account, leaving this one the amount is just leave it blank. So this is what you need to do actually. Prepare this account. So let's take a look at the first after you have prepared the balance sheet here, the skeleton. Okay, the skeleton. What you need to do is you have to go through the additional information here one by one. Okay, for example, in additional information number 1, the ordinary shares were reduced to 30 cents each, and the preference shares were to be reduced by $30 each. So here the word they use for ordinary share is to 30 cents and preference shares by 30 cents. Okay, you have to remember that OSC, the par value is 50 cents, and the preference share is the par value is $1 each. So you need to write off for preference share for ordinary shares to 30 cents. That means you have to write off 20 cents. Okay, you need to write off 20 cents. So 20 cents written off, debit OSC 5 million, because OSC you have 5 million issued and pay up, if I'm not mistaken. Okay, 5 million issued and pay up, capital OSC. So you have to reduce this capital amount to 30 cents. That means you have to write off 20 cents. So 5 million times 20 cents, that will give you 1 million. Debit OSC, credit capital reduction. So you will enter that in the capital reduction. Debit OSC is here dalam balance sheet. So under issued and paid up capital, you have OSC. Originally, you have 5 million at 50 cents, which is 2,500,000 originally. And then you write off 1 million, so deduct 1 million, debit OSC, and then credit capital reduction. Okay, credit capital reduction. And then for PSC, you have to write off by 30 cents. So debit PSC 30 cents times 1,500,000, because you have 1,500,000 in your balance sheet, issued and paid up capital 1,500,000. So 1,500,000 times 30 cents, 450 debit PSC, credit capital reduction. So you directly go to the balance sheet under 9% PSC. Originally you have 1,500,000 minus 450. So you get this amount, 450 to get this amount, 1,050,000. And then record the credit side of the capital reduction account, 450. So settle additional information number 1. Second additional information, here it mentioned that the preference shareholders have agreed to waive 60% of the dividend in arrears. 60% of the dividend in arrears, and to receive ordinary shares at the new par value for the balance. So the new par value now is 30 cents because we have reduced it to 30 cents. So as we calculated earlier, we have 270 preference dividend in arrears. We have calculated in our additional information here. We have 270, and out of this 270 we have to settle paid 40%, which is 1010, because here it's mentioned that agreed to waive 60%. That means we only have to pay 40%. Waive 60% means we only have to pay 40%. So 40% of 270 times 30 cent par value, 30 cent par value, the new par value for the ordinary shares, then you get 32,400. So the double entry to record this would be this amount. Debit capital reduction 32,400 and credit OSC 32,400. So you have here in the capital reduction, put in the OSC that you paid for settlement of preference share in arrears, which is 32,400. Credit preference, credit OSC here we have 32,400, plus 32,400 because you issue OSC to settle the preference shares in arrears. So the total OSC now is 1,523,652. So that is with regard to number 2. Number 3, with regard to intangible assets. So in this question, it mentions that you have to write off intangible assets and also accumulated losses. As I mentioned in earlier session, that sometimes the question do not mention to write off the accumulated losses. So the question is testing you whether you really understand capital reduction scheme. So even though if the question do not tell you to write it off, you should write it off. Okay, these accumulated losses. So in this question, the question mentioned that you need to write off all the intangible assets and also accumulated losses. And apart from that, you need to also write off bad debts of 33,700 from debtors, and obsolete inventories you need to write off 31,500 from inventory, because this is obsolete inventory. That means by saying this, they are revaluing the inventories. Okay, the total amount of inventories, if you take a look in your balance sheet, inventories, for example, here you have inventories of 81,000. This 81,000 you have to deduct with 31,500. And with regard to bad debts, you need to write off 33,700 from bad debt is related to debtors or account receivable. So in your balance sheet, your account receivable balance is 123,450. Then you have to write off 33,700. And the double entry is, first you need to write off patent and trademarks, the whole amount, okay, which is 73,100. Write it off, 73,100. And then goodwill, 200. Accumulated losses, 857. And you need to write off the trade receivable and also inventory. So you need to write off patent, trademarks, goodwill, trade receivable, and inventories. And also you need to write off profit and loss. Okay, so write it off there. Debit, capital reduction. So all these various assets here, okay, plus 857, you will get 119,500. 119,500. So write off all these assets, which is intangible assets, patents, trademarks, goodwill, and then accumulated losses, and also debtors, bad debts, and also obsolete inventories. Total is 119,500. If you find the total here, 338.5 plus 857, you will get 119,500. So debit, capital reduction, credit all these assets. Okay, so assets, intangible asset, patent and trademarks, and also goodwill has been totally eliminated. And also profit and loss is also 0 now. And then for inventories, your inventories in your balance sheet, previously you have 81,000. Now write off 31,500. So you get 49,500. And then account receivable, originally you have 123,450. Now deduct with write off 33,700 for bad debts. So you get 89,750. Okay, so that is the third additional information. The fourth additional information is with regard to share premium. Here the share premium is being utilized to absorb some of the losses in the capital reduction scheme. So 70% here, mentioned that 70%, okay, 70% of the share premium account to be utilized for the scheme. So you need to provide 70%. Now the total amount available in the share premium account, okay, here, share premium account here, the total amount is 230. So 230 out of this 230, you need to write off 70%. So that will give you 161. Therefore, debit share premium, credit capital reduction. So it goes to directly to the share premium in the balance sheet. Originally, you have 230, write off 161. So now you have 69,000. Okay, and then in the capital reduction scheme, on the credit side, you have share premium 161. Okay, share premium 161. Okay, now number 5. Okay, number 5. The investment was sold at a loss of 85. So this is with regard to investment. Investment now is being sold off. And upon disposal of the investment, you get a loss of 85. So investment account, here you have trade investment with a value of 323,900. Okay, when you sold this, you sold at a loss of 85. So maknanya you have to calculate here, when you sell the investment, credit investment, you get the whole amount, which is the cost of the investment is 323,900, but you get a loss of 85. That means you are selling it at 238,900, the balancing figure here lah. Okay, 238.9 is the cash amount that you receive from the sale of the investment. So the loss on the investment will be transferred to capital reduction. Debit capital reduction, debit cash, and credit investment. So you go through capital reduction, debit capital reduction with a trade investment loss of 85, and then credit investment. So in your non-current asset, actually you have investment, but investment has been sold off, so it would not be in your balance sheet after the capital reduction scheme. And then you also have debit cash. So you go to the cash account. So in this example, the cash or the bank is an overdraft. Okay, the bank is overdraft starting from 34,000 debit balance, credit balance, overdraft. Plus, you receive on sale of investment 238,900. Okay, 238,900, and then the proceeds were used to settle the creditors in full. Okay, the money that you get, 238,900 here, will later use to settle the creditors. Now the creditors inside your balance sheet, originally here you have account payable, creditors, okay, account payable here with the amount of 252,160. Okay, 252,160. But you will use the money that you receive, which is 238,900 from the sale of investment to settle this amount. This amount is actually more than 238,900. So that means, what it means here is that the creditors are willing to accept a reduction in their claim, which is the balancing figure here, which is 13,260. Okay, and this reduction is known as the discount. Okay, so the discount here will be entered into the capital reduction account. So the total amount of creditors will be debited, and will be paid using bank only to the amount of 238,900. So the balancing amount of the creditors is considered as a discount, and this will be entered into the the capital reduction account. So you just put in your capital reduction account, creditors, gain on settlement of the creditor, discount 13,260, and then in your non-current liability you have trade payables here. Trade payables, originally you have 2 trade payables here. Sorry, not here. Where was the current liability? There's no current liability here. So trade payable here originally, the amount of 252,160 minus 238.9 with bank, and minus 13.26 with capital reduction. Therefore at the end is 0. So it's not in here. Okay, it's not in the balance sheet after the capital reduction scheme. Okay, so that is with regard to the creditors. And the bank, you put down in the bank here, this is the amount that you receive from sale, and then later on you use this amount to settle the creditors bank overdraft. Okay. Next we have assets. Some assets is revalued, and the asset which is revalued is land and motor vehicle here. Okay, so land and motor vehicle is revalued to 2,890,000, which is revalued upwards of 435 from the original value in the balance sheet, which is 2,455, revalued to 2,890, which is a revaluation upwards of 435. And with regard to motor vehicles, it was revalued downwards, by 30,660 from the original value of 111,110, okay, for motor vehicle. So the double entry is debit for land and building, debit land and building 435, credit capital reduction 435. So you just go to the balance sheet, debit land and building, originally you have 4,455, now plus 435 let's recalculate this amount. I'm not sure whether it is 435 or 44. 445. So the balance at the end, it should be this balance lah, which is 2890. Okay, so for asset revaluation, okay, this is for land and also for motor vehicle, land and motor vehicle, which is 435 minus 3066, so you get 404340. Okay, various asset revaluation. And then with regard to motor vehicle, so originally you have a motor vehicle with a value of 111 okay, 111.11 deduct with 3066, so you get this amount 330 sorry 80450 okay, this amount 80450. Okay, so that is with regard to assets revalued. And then with regard to plant and machinery, here it mentioned that a plant and machinery costing 80,000, which had been mortgaged against the director's loan, was used as a full settlement of the loan. So your plant and machinery, the total amount of plant and machinery here is 401,800. Out of this 401, 80,000 will be used to settle the loan from directors. Okay, the loan from the directors. Okay, used as full settlement. That means by paying this amount 80,000, that means we have paid the loan from directors, settled the loan of directors, and the full amount of the loan of directors here is actually 88, but we only pay 80,000. Okay, 80,000. So that means there will be the directors are willing to accept a discount or a reduction in their claim. Okay, from 88,400 to receive only 80,000. Okay, to receive only 80,000. That means 8,400 is a discount, and that discount will be entered into the capital reduction account. Okay, so here we have a situation. The remaining after that, it talks about plant and machinery. Plant and machinery is revalued after using 80,000 of the plant and machinery to settle the loan from directors. 80,000 is settled or deducted, and the remaining amount is again revalued to 330. So let's focus first on the loan from directors. Okay, loan from directors, total amount of loan is 88,400, will be debited. So we settle this, debit 88,400, and we paid using plant and machinery 80,000, and 8,400 is the discount, goes to the capital reduction. So for loan is no longer available here. Loan, long-term loan from directors. Originally 88,400, now settle 80,000 plant and machinery, and 8,400 is capital reduction or discount, so settle 0. Okay, That means settle with regard to director's loan. So the plant and machinery, you have to write off plant and machinery here. Originally, plant and machinery, you have this amount, okay, 111.11. Sorry, plant and machinery 401.8, and out of this amount, you will use 80,000 to pay for the director's loan. Okay, settle the director's loan, and the remaining amount after deducting 80,000 is revalued to revalued at 330.3. So that means the remaining amount in your balance sheet should be 33,330. Okay, so that means the balancing figure after deducting 80,000 and deducting with this one, 33,330 deduct by 480 tolak 80,000, okay, and then tolak dengan so that means the balancing figure here is the surplus or the amount of revaluation or surplus that goes to the capital reduction scheme. Okay, so for plant and machinery, you will debit plant and machinery 853, credit capital reduction 853. So put here debit 853, credit capital reduction 853. Okay, plant and machinery revalue outwards 8530. Okay, now next we have additional information 8 here with regard to contingent liability, and it mentioned here that the contingent liability materialized. Remember, we have contingent liability in the additional information here where we have 31,400, and this 31,400 materialized, means it happened and the court decided that you have to pay, but the amount that you have to pay by the court decision is only 28,900. So you need to pay this 28,900, debit, this is the amount of the loss that you have to pay, debit capital reduction, credit bank. So you go to the capital reduction, debit contingent liability, debit bank, debit capital reduction, credit bank contingent liability 28,900. So here goes to the bank overdraft that you have 28,900. This is the contingent liability. Okay, 28,900. That is with regard to contingent liability. Number 9. After the scheme has been processed, the cost of the reconstruction scheme amounted to 12,400. Then you have to pay this using bank account or cash. So debit capital reduction account and credit bank account 12,700. So in your capital reduction account, you have debit capital reduction for cost of reconstruction, credit bank 12,700. So you go to the bank account, 12,700 deducted with 12,700, which is cost of reconstruction. So by the end of this capital reduction scheme, the balance in the bank overdraft is 7,600 credit balance. Okay, credit balance, bank overdraft. Another special resolution, this is with regard to additional information 10 here. A special resolution was passed to restore the authorized capital at a new value. Restoring the authorized capital at a new value does not really involve any journal entries. It just means that the numbers of shares is different, but the value of the shares stays the same. Okay, the value of the share stays the same. So you'll have here no entries is needed in that additional information 10. No entries. No entries is needed. No entries is needed. Okay, no entries involved. So you have finished the capital reduction scheme, and once you have finished the capital reduction scheme, you have to balance out this account, capital reduction account. By balancing this account, you will find that it has a credit balance of 691,030. So this will be debited in the capital reduction account, debit capital reduction account, credit capital reserve. This will goes into your reserve account in the balance sheet. You have capital reserve, a total amount of 691,030. 691,030. So settle with regard to capital reduction scheme. So the journal entries at the end normally will look something like this. At the end, you will have, after the cost of reconstruction, you have at the end debit capital reduction, not this amount, and this is the wrong amount. It should be 691,030. 691,030. Debit capital reduction, credit capital reserve. Okay, so that's why you need to open up capital reduction account, because you need to find the capital reserve balancing figure here. Okay, it will be easier. Okay, so that's all for the capital reduction scheme. That means you have finished up your journal entries, and your balance sheet, the final balance sheet, will look something like this. So you have the title here, and you have to write down the authorized share capital. The authorized share capital is the same amount, it doesn't change anything. Okay, and with the total value of the same amount. Okay, it doesn't change anything. The issued and paid up capital, however, this has changed because of the capital reduction scheme and so on, resulting to this amount. Okay, and to this amount. Okay, long-term liabilities, you have 12% debentures, no changes, nothing affecting 12% debenture, which is 90,000. And then you have a reserve for share premium. We have write-off 161, so you get 69,000. And then we have capital reserve in the company reconstruction scheme, and then also bank overdraft. The balance now is 7,600. And non-current asset, you have land and building, which has been written off to revalued to 2,890. Okay, and then plant and machinery, which has been also revalued to 330, and motor vehicle, which is 8450, and current asset inventories, and also account receivable, which has been revalued to 49,500 and 89,750. So that means that's your balance sheet at the end of the capital reduction scheme. So that's how you answer the question with regard to capital reduction scheme. And one question will come up in your final exam, more or less like this question. So you have to study this question very well to answer for your final exam. So that's all for this session. That means we have covered all our syllabus, finished all the syllabus, and after this I will give you assignments and also exercises to prepare you with your final exam. Okay. Assalamualaikum warahmatullahi